Chapter 3, in which Chapter 3 is going to talk about managing your money. Okay, very important. Talking about managing your money and what we are going to be doing in class and what we're going to add on when we do notes, a little bit of notes tomorrow, is we are going to create simple financial documents to help you organize your financials. We're going to create documents that even companies do today. We can do those for our own personal finances, helping ourselves stay organized, knowing where's our money going, what are we spending it on, etc. So right into chapter 3, we're going to skip section 1, we're going to go right into section 2. Of course, I like my pictures with this baby picture here. Okay, but we're going to learn to manage our money so he can change his face around. We are going to create different financial statements being documents that give you information about an individual's financial position. Basically, documents that give you a summary of your money, of your finances. There's two main types that we're going to create and talk about. In the video, we're gonna go into detail on a balance sheet in which that calculates your net worth, and I'm gonna briefly touch on a cash flow statement. We're gonna go more into detail on that in class. Just a few slides. We're gonna go over to start class tomorrow. So, balance sheet. What a balance sheet tells us is it tells us what we own, which is your assets, what we owe, liabilities, and those two combined, when you subtract those two numbers, you get your net worth. So step 1, you want to determine your assets, okay? And assets, very important. If you're looking at the definition at the bottom, those are items that you own of value, keyword value. So cash, you own cash. Property, such as cars, houses, buildings, assets. Any personal possessions, maybe an expensive watch, an expensive TV, an expensive entertainment system, etc. And also investments such as stocks, bonds. We'll go more into detail on the types of assets in class tomorrow. Okay. Secondly, we then determine what we owe. Those are called liabilities. You're liable to pay those. And there's two main types called current and long-term liabilities. Once again, we'll go more into detail on that in class. But essentially the balance sheet, you look at what you own, assets, subtract that from what you owe, liabilities, and you're going to come up with a person's or your own net worth. For S-Track, you don't have this slide, but if you want to add notes on it, that's fine. Just for the vocabulary, this is the one slide that we are not going to cover, just to make note of that. But as we continue on with a balance sheet, all right, we will be creating one. But what the calculation does, when you look at your assets, what you own, of course, minus your liabilities, you get your net worth, or also called owner's equity. For those who have taken accounting, you probably heard of owner's equity with the accounting equation. Very short acronym, ALLOY. Okay, kind of keep that in your mind for you to remember this calculation. And essentially, these two numbers, assets, liabilities, going to determine your net worth. Make sure we get our vocabulary definitions in as well. So, two examples. All right, there's our equation, ALOE, alloy. First example, we have $140,000 in assets. We have $105,000 in liabilities. So we own more than we owe, which is awesome. Our net worth, when you subtract those two numbers, is $35,000, which is not bad. It's positive, good. You can't have the opposite, where we only have $100,000 in assets, but we have $120,000 in liabilities. All right, not good. Where here we are going to have a negative net worth of $20,000. Whenever you have a negative net worth, it's called insolvency. When your liabilities, what you owe, is more than what you own. Hopefully we never come across that. All right, ignore this. We're going to come back to this in class tomorrow. S-Track, you don't have this slide as well, but you can take a look. R-Track, this is a simple example of a balance sheet that we will be creating and looking at. As you can see, we have all of our assets totaled up. If you look on the right, $134,800. We have all our liabilities total up to $102,050. Subtract those two, and in this example, we ended up with a positive net worth of a little more than $32,000. So just an example snapshot to look at what a balance sheet looks like. Now our second financial statement, which is a cash flow statement. Think cash flow, money flowing in and out of your wallet, in and out of your account, in and out of your hands. Okay, you first look at two things: your cash inflow or your income, money coming into your wallet, that'll be your take-home pay, say from work, any gifts you receive. So if it's your birthday and grandma mailed you a birthday card with $50 in it, that is now $50 flowing into your account, into your possession, into your wallet. So that would be income. If you earn any interest from savings accounts that we've been calculating with future present value, that is new money flowing into your account, into your wallet. That's income. So you look at your income, and you're going to look at your expenses. And eventually we will be subtracting the two. Okay, cash outflow, also known as expenses. So that's money flowing out of your wallet. Bills, you got to pay bills for your house, for your car. Money from your wallet flowing out, that's an expense. If you pay a gym membership, when you buy clothes, you buy food, those are expenses. Money flowing out of your wallet, a cash outflow. Okay. In class tomorrow, we're going to go more into detail on a cash flow statement, just the steps to recording and what one looks like. 4 slides we'll cover in class. We'll go a little more into detail on balance sheets, but just an overall summary of a cash flow statement and a balance sheet.